Hey, it's Nick here. Welcome to the channel. Risk has been turned back on in the market. Just to give you a rundown, a little bit of what we're going to cover, it will be stocks, crypto as well, ETF inflows, the Clarity Act a little bit, and some adoption. I have chip stocks, cool. We're going to talk about some AI, some memory, and then we're going to wrap it all in a bow with what I'm doing. 5K total invested coming up. That's one of the few milestones I have on my list, my watch list, and there might be some new positions coming in. There just might. So to kind of get you up to speed, global risk appetite is firmly positive with the S&P 500 up almost 1% and the Nasdaq up 1.29%, while the VIX has dropped 8.58%. So a little bit of what that means is that investors are a little bit more confident getting into the market. They're willing to take on a little bit more risk. Whereas, let's say in one of my other videos that I made, I'll leave a link to it in the description. Whereas if the VIX is getting up to this point where it's sitting at about a 27.85, that's typically when everyone's scared and they're selling. But this isn't financial advice, but you would know if you watched that video that this is also the best time to get in, especially if you're not already in the market as well. Basically, when everyone's fearful, that's when you get to pick up whatever assets you want at a good discount. And as we sit here for stocks and crypto, we're still in fear on both of them. It's 41 on the stock market, 33 on crypto. And then one more thing that I wanted to add in is that analysts suggest the cooling AI trade may shift capital into crypto, creating a breakout opportunity as equities set the tape. And policy tailwinds from the Clarity Act and Coinbase's congressional push add regulatory clarity to the mix as well. And then one last thing is that geopolitical noise, Iran strikes, the Saudi nuclear deal, none of it has mattered. Even though oil prices are going up, investors have basically ignored it and they're still putting their money into riskier assets for a good payoff. Now, the Clarity Act, that's one thing I want to touch on is because I'm a big believer in Bitcoin. I think crypto kind of has its place, but I also think that most of everything in the market revolves around Bitcoin at the end of the day, whether it does well or if it does bad. If Bitcoin does well, then other things will pick up alongside it. And then if Bitcoin does bad, then everything else is just going to do just much worse. But well, that's a video for another day. The main thing is that I think Bitcoin is the only thing that matters in crypto. Maybe Ethereum, maybe, right? But that's kind of the only thing that matters. And the thing is that a lot of people who are Bitcoin maxis, if you will, they don't want the government getting into it. The whole point for it is to be decentralized. There's no entity, there's no government, there's no business, there's nothing that someone could say that could cause the price of it to go up or go down. And I think that yeah, that's a good view on it. But in order for us to get like maybe that $1 million Bitcoin or 20 million Bitcoin, anything like that, there's gonna need to be more people buying it. And in the most recent bull market that we had, when it did come to Bitcoin, when we did top, what a lot of people will tell you is that we topped on apathy. This is basically a point where people didn't even care about it. So imagine if it was like back then during these times where you would walk out like your grandma might have asked you like what Bitcoin is. That's a different type kind of top. Whereas if you're topping on euphoria, that's when you had like those astronomical drops like back then where you would drop almost 80 to 90%. Whereas now since we topped on apathy, it actually hasn't been that big of a drop. Like it's been a drop, like we're far away from all-time highs, but I think that since there was less people in the market this time, it just wasn't as big. And a lot of people didn't get dumped on it. And then on top of that, I think a lot more people are holding now too. So that's just one thing. You also have the ETFs, like this is giving people more of a exposure, if that makes sense, to Bitcoin, where because a lot of people don't trust it, right? If your senator or a business you respect or even your local government, like if they start buying the asset, I think that that's what can kind of help the average person, especially if you don't know anything about it or you're fearful of maybe getting scammed or something like that. It would make the common person much more likely to adopt it if others around them, especially those that they look up to or that are above them, are adopting the same asset as well. And I think it'll take time. I'm personally okay sitting at these price levels because this is simply just a accumulation zone. Now, one thing I want to touch on too is that yeah, basically everyone thinks that AI and chip stocks are cooling, and we have a video that we're going to react to here about basically seeing what some insiders are doing with their money.
And I want to start with Stephanie, who's made some key trades in this space recently. Steph, you tweaked your semi exposure. What brought you into the fold here?
Yeah, sure. So I sold Marvell because I was up over 100%. Same like I did with Teradyne. I think you take profits when you can take them. And then I added Micron because the stock is down about 24% from its highs.
I do have to add that in there. I think that's one thing that anyone should know is that you never go broke taking profit. So that is the main lesson that I think should be learned from the intro of her statement.
And the fundamentals remain amazingly strong. We all know that, but I think it's going to be stronger for longer. When I went through the quarter, and I've been going through the quarter report over the last couple of weeks, and they've signed 16 deals last quarter, 14 of which it gives them $100 billion in RPO, and that's bookings. And I think that means that the visibility is just so much better as a result. And so I do think the AI trade is certainly not over. I think we're in the third or fourth inning at this point in time, and we are short memory. We are short compute. And that gives this company a lot of pricing power. I don't know if we're going to see the pricing power that we saw last quarter. I mean, they had 60% average selling prices in DRAM and 80% in NAND, but I do think you're going to see ASPs be stronger and just strong in general. And I think this company has about $40 a share in earnings power through the cycle. I also added to NVIDIA. We started buying that 2 weeks ago. I just believe that it's lagged so much. It's actually underperformed the group by 53% year to date. It trades at 18 times forward estimates. That's the cheapest it's traded at since 2019. And we know that they dominate the GPU market. I understand there's competition coming, but they will always dominate the GPU market in my mind. And they have new products coming. And this is a company that's growing revenues in the 80s, gross margins in the 70s, and they're going to double their free cash flow between now and next year, end of next year. And so I like that visibility as well. And I think there's a good value there.
Yeah, I saw this interesting stat from OpCo this morning, guys.
All right, we'll cut her off there. NVIDIA, that's a good company. It's one that I have exposure to in my portfolio through QQQM. So I'm definitely not opposed to like I'm not even gonna lie to you. Like I might add some of that into my portfolio when I hit my milestones that I'm looking after. And then I think the other one she spoke about was Micron. Like my thing with the AI and the chip stocks and everything, I think that it's had a good run. I do think it has, but at the same time, I don't think AI is going anywhere. And then not only on top of that, I mean, just the technology we have is just continuing to get better. Like you look at people that are in the gaming community, for example, there's always going to be people wanting to buy good GPUs, CPUs, RAM, anything like that. But most importantly is AI. Is if you have noticed anything compared to this year to last year, is that almost everything, like almost any product you engage with right now has some form of artificial intelligence into it. There's something you could just go search something on Google. Like it's already giving you an AI transcript of whatever it searched right now. And I think as we keep moving forward, AI is just going to be that more prominent in our lives, and it's not something that's going to go away. And I think as far as the earnings, like I'm not an expert on earnings report with these companies. The main thing that these companies are doing right now is that they're spending a lot of money on capex. And if you don't know what capex means that basically the business is investing for the future. So if they're putting a lot of money into the future for as far as well, let's just say buildings, right, land, anything like that, or products or anything like that, the company is expecting to have higher earnings down the line. And I don't think the earnings for these companies is going to slow down. I think it will rise, not even just for inflation, but it's going to rise anyway. The price, so the money that they earn is going to increase. I don't think we're there yet. As far as where we are, if these stocks have reached their top, I would what I've noticed whenever I would look at charts is that it's typically around March, almost anytime in like March or April, at least in the equities market, that's when things like the S&P or even just tech, that's when you kind of get those drops. So we probably are not going to see a drop. And I will say one thing. I think she's right that we are in like the third or fourth inning. And I think the fourth inning for these stocks, at least the two she mentioned, but even just some of the others in general, I think the third and fourth inning will be around first quarter of next year. But let's let her continue.
With Micron and NVIDIA are the top two contributors to year-over-year earnings growth for the S&P in Q2. If these two companies were excluded, according to OpCo, the blended earnings growth rate of the S&P for Q2 would fall to 16.8% from 24.7%. That's a 790 basis point improvement. Joe, I know you own these two as well. Are these must-owns, just given their impact to earnings growth in Q2?
Well, look, I think if you have not owned them, the right perspective to take is you now have a pullback into what is technical support.
Well, you did. Micron's up 10% today.
Right, and you're technically still sitting above the 100-day moving average. I think the fundamentals are well known about memory, high bandwidth memory, and the universe of AI infrastructure. We know hyperscalers will continue to spend, and they are ultimately going to benefit. I think from a sentiment positioning standpoint, they reached an extreme, they went parabolic, and you needed to work off that overbought type of condition. And I think that's in fact what you've done. So if you do not have a position, you have what I would call a low risk, well-defined point of entry here versus these critical supportive moving averages. If they break down below it, then you can make a strong argument that maybe there was a significant inflection point that was traced out several weeks ago. But I hold them from a core perspective in the ETF. I'm not adding to them here because I do think we've worked off the significant fever. And I think overall, you've seen the momentum factor come down dramatically this month. Okay, one of the worst months for the momentum factor in the last 10 years. And it seems to me you have a little bit of a handoff, and what's saving the market is the performance of the mega cap. It's your Apple, it's your Meta, it's your Amazon. They're performing, Nvidia. They're all performing really well in July, and I think that handoff might continue. So I'm a little bit muted in terms of how I think about positioning. If you're there, stay there. If you're not there, low risk point of reference. Don't get overly excited about a trade that probably saw its most strongest intensity several weeks ago.
Well, I guess the key question too, Josh, is whether this is a factor unwind in terms of momentum and a lot of the AI infrastructure exposure, or a fundamental unwind. This is a question that Wells Fargo was asking this morning. And if it is purely factor-based and positioning based, do you feel like that unwind is to a point now where it's completely been flushed out?
Well, the market, it doesn't matter what I think, because the market is telling you that they're buying the dip, and they think that most of what went on was technical and not fundamental. That's why the entire AI trade is ripping today. Not just the semis, but all the non-technology companies that have been caught up in this whole AI capex build-out theme. They're all up. DRAM's up 10% today. The top performing stocks in the S&P: Ciena, SanDisk, Western Digital, Micron, Intel, AMD, Corning. So it's all one trade. The trade got washed out this month. Joe made a really good point, I think, and we had this handoff underneath the surface of the market that allowed us to not give up too much ground in the S&P at the index level. And the market today is telling you they want to be long these names. Now, why today? This is the thing that nobody's brought up yet. If you're bullish on this theme, you can't not be in these stocks ahead of Google. Because what the Google earnings report does for us every quarter is it serves as this sort of like, come on into the revival tent for Brother Love's Traveling Salvation Show. It's the affirmation that everybody needs to hear about the state of CapEx, the forward guide for CapEx, the fact that all these projects are going ahead, maybe even more projects than we thought about 90 days ago, the last time they reported. So like if you're bullish, you need to be in ahead of Google, not sitting on the sideline, because this is arguably the cleanest AI story in the entire market from a hyperscaler perspective. I also think it's a really healthy tape. The fact that we had these stocks 20, 30% drawdowns, you would have thought, oh no, now the whole market's going to sell off because it lost its leadership. Number one, that didn't happen. And number two, this has been a really helpful reminder for traders. Ain't no such thing as one-way trades. It doesn't exist. The best stocks in the market, the most powerful names, the best earnings stories, they're going to have down days, they're going to have down weeks, or even a down month on the way toward higher prices. We need to get that reminder. If they just go parabolic every single day the market opens, then you're in for a real crash. And fortunately, this is what keeps the market honest. This unwinds some of the leverage. This gets people to actually hit the sell button on some of these 2x ETFs. Like, this is what you need for a longer-term uptrend. So I'm really pleased with the way not only these stocks are rebounding, but the way the overall market is processing what's happening and living through it.
That's a really good point with regard to Alphabet earnings and the timing.
I'm very good at this.
Yeah, you got some experience there. Also in kind of the fundamental camp of why we're seeing semiconductor stocks move higher today, you've got Taiwan June export orders that were kind of skyrocketing. TSMC reportedly looking to raise prices 10% next year. That's according to Nikkei. So I guess the question is, given what we've seen in terms of positioning, given some of the fundamental stories that we're digging through today, and Josh's point about Alphabet earnings, do you think these moves hold?
I do, and I think all that's what's transpired thus far. This is a matter of positioning from my standpoint. Obviously, the stocks or the SMH, whichever index you've been on the semi side, have run, to Josh's point, I mean, they've been parabolic runs that we've seen in the first half, and it is healthy to see other sectors participating, like healthcare, financials, industrial, starting to move. And I think to Joe's point, if you're not in there, this is a potential opportunity, because to your point, Leslie, at the top of the show, 48% of earnings growth is going to come from the semiconductor index going forward. So there's clear visibility on what those profits look like. CapEx is not going to slow down. You're going to hear that from Google tomorrow. They'll reaffirm and potentially raise. I think you're going to hear that from most of the hyperscalers. So I think that is not a place to ignore. And this kind of disruption that we've seen over the last couple of weeks, I think, presents an opportunity if you're not there.
All right, nice. Like I said a little bit earlier in the video, AI is not going anywhere. We're just now starting to, if anything, I think I think he's right that the fever has worn off, like the parabolic run, that's kind of cooled down, but we still got some juice left in the tank. Now, for me, I have a concentration in most of this. If you look here now, I know this isn't looking too pretty. The overall portfolio, it's getting close to about $5,000. It's almost there. If we exclude the cash and just look at the crypto. But I want to look at the equities real fast because we're approaching some milestones with it. So one of my main goals is that once I hit about one share of QQQM, I'm gonna slow down my allocation to that. I'm just probably gonna do it maybe once a week. So whatever I would have invested throughout the week, I'm just gonna do it in one shot on a Monday every week. Now, with something like QQQM, it already gives me a lot of exposure to some of these companies that were mentioned in the earlier video. So I do get some exposure to Nvidia, Apple, Microsoft, Micron, Amazon, AMD, Google, Meta, i.e., Facebook, Instagram, and Tesla. And speaking of Alphabet, Google, and Tesla, those are the two companies that do have earnings this week. Now, I will say this. One, I'm never gonna go against Elon Musk. He is a good businessman, regardless of whatever you think about him. So I would never go against him in like whatever he's doing. Like I'm still keeping my eye on SpaceX. I just think that that's not a buy right now. And then with Google, it's the number one search engine in the world. Like if you are watching this video right now, you are using a Google product, YouTube, right? So it's not going anywhere. And I do think that the as more as time goes on, we're going to be seeing AI just as much incorporated in our everyday lives. Now, I didn't see what we have now last year, to be honest with you. But I think the main thing is that even if you're not even investing in AI, you at least need to be using it in some capacity because that is the main thing is that it's those that understand how to use the technology, those are going to be the ones that are progressing the most in the future. And you don't have to necessarily, it's not necessarily a tool where it does all the work for you. It's something that can assist you with an area that you're already well versed in, if that makes sense. And it can even help you become more well versed in an area if you use it correctly. Now, like I said, we're approaching about 5K in the portfolio. That was basically a little bit of my plan with QQQM. The other plan is to keep building up VOO. So that's basically my direct exposure to the S&P 500, which again it's going to have allocations into the same thing as QQQM, just not as concentrated. So we have our NVIDIA again, Apple, Microsoft, Amazon, Alphabet, Broadcom, um, Micron, Meta. It's literally the same thing, but QQQM just gives me a higher concentration in that. And that's going to be the main thing with that. And then, yeah, I don't know if you saw my last video, but we have this free Microsoft share because someone signed up with my link. So if you want your free share of a stock. The link for that will be in the description. But the main thing too is that another thing I'm going to change going forward is that I'm going to slow down my DCA into Bitcoin. Now, this right here is a little bit off. So it's saying I have some tau. I put one coin in. I was trying to see something and then I said, you know what? No, this is going against my thesis. So I immediately left it. So here's the updated version. So we've been doing about $17 a day into Bitcoin. So for the rest of this month, that'll be about maybe 200 allocated to that. But my main goal with that is that once it slows down, I'm going to use my Coinbase One debit card to kind of get cash back in BTC. And then I'm also going to let the cash that I have sitting idle earn its yield too. So if we look at it real fast, it doesn't even, yeah, here we go. So basically what I've earned so far is just $1, but it's up about 5%. And then we have about 55 cents basically pending that'll be deposited into my account or rewarded into my account. It's both, but it'll be rewarded into my account on basically Thursday. So that's one of the two ways that I'm going to be using July to build up my accumulation a little bit. But I'm just gonna take a step back from crypto and trying to allocate more of the new capital into my equities. And as far as gold, if we look here now, gold has it's went on a great run as well too. I like investing in gold through Pax Gold, just like the tokenized version. That's just me. Fight me in the comment section. But me, I'm just kind of sitting at a point where anything below 4,000, that's when I'm going to come in, scoop up and buy. So I'm gonna play that basically where anytime it gets there, I want to be in it. But I don't think that gold is necessarily a cheap of a purchase, at least me personally. It's not financial advice, but that's the only reason why I haven't been allocating more than I could into the asset. But I'm gonna slowly build that because I am a firm believer in gold. I'm a firm believer in tokenization as well. And not only having gold, but a tokenized version of it, it makes sense in my brain. At the same time, I get it. I can't hold it. I can't touch it. I get it. I understand. With Ethereum too, we're just gonna kind of sit back with that one a little bit. Not gonna do too much. If you see here, everything's up right now, so we're like it's been a good week so far, despite everything that we've heard. about what's going on in the Middle East. So that's my main thing with that. But I still believe we're still here in a bear market. So I I think we'll get another drop, but I think right now I'm gonna just let it ride a little bit, and then I'm gonna kind of tweak what I'm gonna do for the rest of the year around September, October, and then we'll probably start our $17 a day DCA again into that. But I'm gonna take a step back from crypto for a bit, kind of let these positions ride. You see here we have point zero for BTC. So my main goal with that is one, I want one Ethereum coin and I want one Pax Gold. So ETH and Pax Gold are obviously going to be the easier ones that I can obtain a full coin on, but those assets, I feel like I built up a good base in just the whole crypto portfolio alone. So I'm just going to keep depositing cash and then let that earn a yield. And then the more cash that I allow to sit, the more yield I'll earn towards BTC. So that's just a little play I'm trying out, but most of the capital that I am going to be deploying starting next month is going to go straight into the equities. And we're gonna try and knock out this VOO position. I want to knock it out fast. I want one share and then I want one share QQQM so I can stop that. And we'll keep doing about our $1 to $2 every day into SCHD. And I also invest in my Roth IRA, but we're not I'm not sharing that one right now. Now, as for my watch list, I have a lot of things that I look at that I'm curious about and that I want to get involved in, but I want to take it slow. And I think once I hit that 5K milestone, that's when I'm going to feel a little bit more comfortable investing in not only another ETF, which honestly, it's either going to be VXUS, International Diversification, or it's going to be something like SMH, so I can just get even more of a concentration into these chip companies and AI. And speaking of that, the one of the main companies I want to buy is AMD. Now, I think I think this company has the potential to be at the same price that Micron is right now. Now, when that happens, I have no idea, but I do believe it because I invested in AMD around here at some point. It might even show my past buys, but let me see. There were some buys that I made when it was in the low 200s, and I wish I didn't sell. But at one point, I was trying to dollar cost average a little bit that I could, and when I would get some gains, I would basically take it out and then I would just either put it into my Roth or I would let it sit or I would move some of it into VOO. So I'm a firm believer in that. I think it has good fundamentals. I don't think Nvidia can do everything in the market, and I think AMD can be just as good as Micron or Nvidia. And it's what's needed. Cloud computing, AI, chips, all of it. Next thing on the list is SoFi Technologies. Now, this one, I, I'm a firm believer in going against the grain. I don't think anyone kind of likes to do anything traditional, but I've always been a fan of technology. I've always been a fan of innovation. So a little bit similar to Robinhood. Well, a little bit similar is that basically they are going in the way of um, taking traditional finance to a new level and appearing to a younger audience. Now, one of the reasons why I like SoFi is because it reminds me of Robinhood in a way where it's the app that's easy to invest in. Now, yeah, they used to be a lending company. They also did buy a bank, so it's gonna give them more opportunity with raising capital or even using it to lend to people. But the main thing is that it's their attraction to the younger audience and people that want to do things differently. And or at least as we move forward in a digital age. So I'm a firm believer in that. And kind of once we hit our one share in VOO and QQQN, we will at least be honestly, I'll probably be buying a share a week in this, maybe two, maybe five. It really depends. I might do three or four. Two or three. I don't know. I'm still tussling with it, but it's one of the few companies that I'm going to start putting into my portfolio along with AMD. And then the next one, Robinhood, as just like I said, it's an app that appeals to a young generation. But my thing with Robinhood a little bit, and if we look at the Morningstar here, Robinhood could be one of the larger beneficiaries of significant impacted intergenerational wealth transfer in the US with a median customer age of 35 years old. It also has widespread adoption of tokenized assets, which could benefit Robinhood as one of the early movers in the space. And with a significant fixed cost base, Robinhood could even grow more profitable over time if it can successfully execute its ambitious product roadmap. Now, what some of the bears are saying, and this is a good point, is that the firm might struggle to retain users as they age, given that Robinhood is the first brokerage for more than half of its customers. And the reason why that It makes sense is because you can literally start with just $1, and that's what I like so much about it, is that they made it so easy. I understand that some people think it's gamified and things like that, but it's the fact that it makes it so simple because like I don't know if you know this, but back then you had to buy a whole share of something before you could buy it. I'm not saying they were the first to do this, but I'm just saying at least what they've done, it's made investing extremely easy. On top of that, they have, once again, one of the best credit cards on the market right now. You have a 3% cash back on any purchase with it. On any purchase. You show me someone who has that other than Coinbase's card having 4% cash back going towards Bitcoin, right? Best credit card on the market. Now, another thing is that if Robinhood's core user base is largely saturated, marketing programs like the firm's IRA match may simply be renting customers, driving deteriorating marketing returns over time in competitive industry. And then the last one is that consistent client underperformance relative to market benchmarks can encourage less active and less lucrative investing behavior. And what they mean by that, this is where some people say the app is gamified. A lot of people see it as a trading app, and when it comes to things like that, people lose a lot of money. So a lot of people try to beat the market. That's what most people try to do that invest. They want to try and beat the market, and most people don't, right? Typically, those who do well are the ones that just invest in the S&P 500 or and have a diversified portfolio with maybe some international stocks in there as well. But those are the main things that I'm looking at and adding to my portfolio once I hit those milestones of getting the full share of QQQM, and then as we push forward to obtaining one full share of VOO. But most of the new capital is going to be going in there. Now, right now, you see we're doing about 5 a day into VOO, two into SEHD, and then 3 a day into QQQM. So I want the full share so I can get that tilt and some tech and AI exposure. VOO is going to also give me that, obviously, with more companies in the background. And then we have SEHD. I honestly, when I look at it, I don't even think about it. Like that's not honestly not something I'm not going to care about until like 20 or 30 years from now. And again, I put that in my Roth IRA, but I want to be able to use that income as it grows, so I buy it in the taxable as well too. And we have Microsoft, and we might add to that in the future maybe, but right now we're just letting that free stock we got, right. But you'll see a little bit more that I have here on my watch list. I have the Boxable. Not gonna talk about that, but you have like SanDisk in here, American Express, Revolve, SpaceX, Liftoff Mobile, Celsius, Nike, Cheesecake Factory. That for if anyone who passed that would have been doing well. But SMH, BM&R, Elf, SoFi, ServiceNow. There's basically everything you see here. At some point, I want to at least have it be maybe a 2% allocation to the portfolio at some point. At some point, but that's really it. As far as the three, AMD, SoFi, and Robinhood, those are the ones that I'm probably looking at adding next. Most definitely SoFi and AMD though, out of any of them. And that'll kind of do it for the video. So let me know what you think. Have has do you invest? Um, what app do you use? If you don't have one, links in the description for both Coinbase and Robinhood. You can invest in stocks and crypto on both. uh, and let me know what you think of the video and what you're doing. But this is what I'm doing, so I just want to share this. I'm just documenting this. I'm a regular retail investor, not a hedge fund manager, not a person that built $1 million business. So I'm going through the journey, just like anyone else out here. And we're approaching a 5K total invested, and then we'll have a video come out of that, basically a little bit more of a deep dive as far as what I'm going to be doing moving forward once I reach that milestone. But other than that, thanks for watching. Hope you have a good one. Bye.